What is going on, crypto family? It looks like, I think that after party last night might have been a bad idea. You know, the tour of the free bar.
Yeah.
But yeah, huge thanks to Joseph and Alon for putting this on. You know, it's a lot of work goes into these things, so you know, big props to those guys. And today, I guess we're going to talk about bots. So to start it off, how many people in here actually know what high-frequency bots are? Show of hands, anybody? Okay, cool. How many people actually use them? So 1, 2, okay. How many just traditional traders that, you know, basically just do it the old-fashioned way? All right, I get a couple. All right, well, today I guess we're going to find out, excuse me, which is better, traditional or using bots. So if we could, let's just start off by introducing ourselves. We'll start at the end.
Hi, I'm Jeff Dorman. I'm the Chief Investment Officer at Arca, which is a Los Angeles-based asset management firm focused on digital assets. And prior to forming Arca, I was in the traditional world. I was an investment banker and a debt and equity trader at Lehman Brothers, Merrill Lynch, Citadel, and a couple other smaller finance shops.
Great, I'm Craig Braun. I lead business development for Total. David was up here earlier today, so you may be familiar already. We aggregate liquidity from DEXs and provide smart order routing to ensure that traders can always control custody of their funds and ensure they're getting the best pricing for any trades that they're making.
My name is Russell LaCour. I'm the CTO of a tech company here in LA called Tantra Labs. We focus specifically on algorithmic development for BTC-denominated returns. So we're primarily focused on making more Bitcoin.
Hi, I'm Lisa Edwards. I'm the co-founder of Satoshi Sisters. We're a crypto trading group, and I've been trading for nearly 20 years. So, and I primarily trade cryptocurrency now.
Hi, my name is Frederic Rough. Frederic Rough, CEO of Coinsquad. We provide on-site and remote assistance with digital assets. We've done something different in the blockchain and DLT space, creating a remote monitoring and management piece of software on Hedera Hashgraph. So my background is in information security and IT in general, computer networking.
Good stuff. My name is Robert Beatles, Christian, husband, father, business builder, and co-founder and builder of the Monarch Wallet. And I guess Crypto Beatles on YouTube and TV and all that kind of cool stuff. So anyways, today we're going to talk about bots. So let's start off for the people out here that don't know what high-frequency trading bots are. Let's just kind of give them a refresher. So Russell, why don't you tell us, what is a high-frequency trading bot? What's it do?
Well, in this market, I wouldn't say that there's many high-frequency trading bots because you rely a lot on exchanges, which aren't very high-frequency. Normally in the stock market, you have like fixed APIs, which are very, very fast. But to a normal trader, a high-frequency bot would be that order that's going very quickly, that's going faster than a human hand could type. So a lot of high-frequency traders are focused on making very small, quick returns where they add up with basically no risk. So they're taking trades across multiple exchanges at the same time, or getting in and out of a position almost instantaneously and hedging themselves out, something that a human couldn't necessarily do.
Cool. Are there different types of trading bots?
Yeah, so like what we focus on primarily at my firm is more long-term trading. You know, our trades last anywhere from a few days to a few weeks. So to a traditional trader, maybe that's high frequency. But we're looking more at momentum changes or different strategies as far as the market's overextended or underextended and buying into market reversals. So a good example of an algorithmic strategy would be saying the market is down too far, so we're going to start buying, or it's overextended, so we're going to start selling. It's a very simple way to think about algorithmic trading.
Cool. And then how does it work with the algorithms? Do you actually program it yourself, or you find somebody else and use it that way? If everybody could win, it'd be great.
Yeah, sure. If you guys want to take this, there's a few different ways like algorithms could work. A lot of the buzz today is machine learning, which people think is this like magical box of information that's going to predict the future, and it's really not there yet. But you are able to basically tell something in code, like let's say when the price goes up 10%, I want to sell it. So I can write code that says, if the price goes up 10% from my cost, sell. If it goes down 5%, also sell, because I don't want that position anymore. And that's a very simple bot. To go further down the line, you might say a 10-day moving average crossing over the 20-day moving average is a signal to buy, and I'm going to do that. And then you might get a little more elaborate and say, but if it's 20% different between the two, I'm going to sell. So you can begin to build kind of elaborate creations or bots that are taking advantage of different market movements. And you can test in this market and any other market to see basically, does that hold up? Does my thesis of buying the 10-day and selling when it's too far over, does that work in Bitcoin? Does that work on the S&P 500? Does that work on the euro versus the dollar? And just a very simple idea to think about for algorithmic trading.
Can I just jump in with something there? You're
Yeah.
saying that you're creating a bot that's selling at 10%, or 5% if it goes against you, selling at 10% up there. So what
Yeah.
if like Bitcoin at the moment is only moving in small positions? So at the moment it's moving 1 to 2%, maybe every day.
Right.
So how does your bot work in that case?
Right, so maybe if that was the case, you'd write a different bot for that,
Okay.
right? So then that scenario, you're talking about a bot that's looking at much larger movements. You're talking about something that I think there's going to be a lot more vol. So I write this 10% bot. But then for your higher frequency traders, they're looking at more, there's a 1% movements happening, and I just want to capitalize on them. A lot of high frequency is basically trying to predict where the price is going to go and picking up that price as it drops. A lot of market making is like this, where you're looking at, is the price going to move a certain amount within a certain amount of time? It's like mean reversion, which is saying the price should only move 1% in a few minutes. If it moves more than that, then I'm willing to buy it, because the price normally, according to my distribution, which is just a way of predicting based on things that have happened in the past, I'm willing to buy it because this shouldn't happen. 90% of the time, this doesn't happen. So I'm willing to take the other side and purchase even though the price is falling. And that would be a more advanced version of that bot.
Gotcha. What's your experience in the space?
My experience in the space is a little different. We provide tech support, so we've got users that contact us 24/7 when they are interested in getting into trading bots, and I always tell them the same thing, that you should have you should have a decent amount of experience before you jump into this, because it's like giving a child a chainsaw if you don't know what you're doing. So yeah, we just migrate them around. There's a couple of different types of services that have practice type of sessions, simulators, crypto hoppers, stuff like that, and I tell them to use those to get your feet wet and do some traditional trading, and really start studying before you start to set up the API keys and all that stuff.
Gotcha.
And set up your trading bot. So
Cool, man. And then Jeff, what's kind of your experience in the space? Because you come from kind of a more traditional space, right?
Yeah, sure. I mean, I definitely come from more of an old school traditional trading background with debt and equities and even more illiquid securities. And I personally believe that crypto actually trades much more like illiquid markets, like the high yield debt market or like distressed markets, because at any time bid ask is very wide. The liquidity is only there when you need it. You have huge gappy moves where the market just moves one way or another altogether and nobody has a chance to trade in between. So I actually think the skills involved in OTC trading and private trading is actually probably more or equally important as some of the algorithmic and bot-driven trading. I think where I come around on the bots is it obviously creates a lot of liquidity in the market, and liquidity is a good thing. And I'm not a developer, I'm not a data scientist, but I've worked around developers and worked around programmatic trading my whole career. The problem I have in crypto is that we get pitched all the time of either people trying to work at Arca because they have a strategy they want to show us, or outsourced data scientists that we work with who are building strategies. And even though I don't understand any of the inputs that are going into it, the output is almost always the same. Everyone's always going the same way, at the same time, on the same levels. So when you have a traditional market in debt and equity where there's so many different players, even if the algorithms come out with the same answer, there's always somebody to take that contrarian view. In crypto, because it's so driven by traders and by the bots, when everybody's student body left or student body right, and on top of it, it becomes a foregone conclusion because everybody knows it, it doesn't really matter how good your strategy is, you're just watching what everyone else is doing. So I'm trying to figure out how, as a developer, as a programmer of these bots, how you differentiate your strategy from someone else's when the answer is the same.
That's a great point. And we were talking about this backstage, this idea that today's market, and you've probably been around since the beginning as well, is like the 80s and the 90s stock market is very similar to the market of today in crypto, where moving averages hold up, right? And we attribute it very much to this idea of fundamental analysis of crypto isn't really there. The real analysis is the price action. Where is the price going? That's the only way to tell, but then you lean to this self-fulfilling prophecy. And the market becomes a self-fulfilling prophecy where everybody thinks the price is going to go up, and it does, because they're buying into it.
Right. Well, I agree with that to a point. I think short-term, 100%. It becomes a self-fulfilling prophecy. It's a foregone conclusion. Everybody's looking at the same charts, the same lines. But I disagree that there's no fundamentals. I think, in general, everything in investing is a narrative, right? The price-to-earnings ratio is a narrative that 100 years ago nobody even understood, and now it's a benchmark that everybody looks at. Same with EV to EBITDA or debt to EBITDA. All these price to sales, they're all metrics that by itself don't mean anything but have become an accepted narrative over time. So there are fundamental factors in digital assets that do matter, and if you look over longer time horizons, they generally tend to matter. For instance, if you look at this year, all of the exchange tokens, the BNBs, the Huobi's, KCSs, they've all largely moved together, right? The platforms and applications have largely moved together. The money tokens have moved together. So over time, there are fundamentals of some sort that do play out, where it's either it's relative value thematic investing, or it's newer crypto-specific metrics like NVT or MVRV. But short term, 100%. It is all driven by these flows, and these flows are just so much bigger than the entire market that it's why we have such outsized moves. And I don't really know what changes that other than more and more money coming into the system where less people are reliant on these short-term trading signals.
That's a great point. And to add on to that, because I agree, and I'll backtrack on the fundamental. I speak about Bitcoin a lot, and I think for Bitcoin, the fundamentals that we have are like the price to mine, right? Like, what is that cost? That hard cost is a true fundamental, where we're looking in the equities, it's more price and earnings, but in Bitcoin, the only way to really measure the value of it is the market, is how many people are creating wallets, how much does it actually cost, what is the cost of this store of value versus any other store of value. And for us, at least for our systems and what we're focused on, is all of that comes down to the price. You can measure all of the fundamentals of Bitcoin aside from the actual mining cost in the price. Because as more people want to come on through a fiat on-ramp or through any other token on-ramp, the price goes up because it has to swallow up their input into the market. Unless we're talking about dark pools, and I don't really want to get into that today. But truly the price will drive adoption, and adoption will drive the price in this self-fulfilling loop that is crypto today.
And then in today's market, I mean, what's your strategy? Are you guys, long, short? You guys trading at all? It's kind of, it's a little scary out there for people, right? Wouldn't it just made more sense to stay in Bitcoin? So what are you doing now? Do you trade at all?
Yeah, I'm long.
Okay.
I'm long
on what?
I'm long on HBAR, I'm long on EOS, I'm long on Bitcoin. There's a couple others, I won't mention them right now.
When was the last time you bought?
Last week.
Last week? Yeah. All right, cool. I always love to hear that. People haven't given up, so. What about you, Lisa?
I'm long on Bitcoin, BSV, Ethereum, what else? Litecoin, and I'm just about to go long probably later today on Link.
You doing a lot of trading still?
Yeah, full-time trader, and run a Discord and give signals, so that's kind of what I do all day. And the price at the moment is very volatile, and we've just had a small fourth wave correction. I'm an Elliott wave trader, so not a bot trader. And so I go through all the signals that give me, Elliott wave, support and resistance, EMAs, MAs, and I look at volume entering the market, and so that gives me liquidity as to how much, the volume's going to go up or down, and so that's kind of what we do. And when they all line up, then we go long, obviously. When the money comes out of the market and the coin market cap, drastically drops, we pull the money out. So, yeah.
Gotcha. How about you, Russell?
Personally, long Bitcoin forever. But the algorithms have been short Bitcoin since about 12,000.
You said what?
So our algorithms have been short Bitcoin since about 12,000.
Oh, okay, gotcha. And how often are you trading?
This specific trade, we've been in and out of it about 4 times. Most recently entered short again around 8,400 when the price failed to break out. And any given trade will last from a day to a month. So
Gotcha.
that might change in the next few hours.
What about you, Craig?
So Total's really focused on enabling traders in the decentralized exchange space. So I will forego giving you my opinions on trading. I think listen to the rest of this panel. But I'll offer, at least on this topic, one quote that I just heard recently, which was, I don't sell, I only buy. And so I think a lot of these groups, a lot of the folks in this space are long on the industry, and so they're looking for good times to buy, but not necessarily active traders.
Yeah.
I think there's one also sort of perspective on the bot trading here part that coming from the decentralized exchange space. There's some interesting opportunities in decentralized exchanges because you have a lot of fragmentation in liquidity and some larger spreads that active traders feel like there's an advantage there, but you're sort of constrained also by working on chain, which means there's expensive transactions. So that will slow down the slows down the incentive system for working actively by putting orders on the books and taking them off for gas fees and for timing. But there are still some opportunities for automated trading, which I would, I think it starts to get into a gray area, but some real opportunities there for folks to work with something like a set protocol, which will monitor the market and prices and sort of rebalance portfolios and strategies that starts to look to a retail investor a little bit more like a bot trading environment where you can take advantage of, automatically take advantage of movements in the market without sort of being a very active trader and manually sort of programming your own strategy. I think those things start to look a little bit interesting also.
Cool. Jeff?
Yeah, I mean, ARCA has different strategies for different types of investors. I mean, there's no one right or wrong strategy out here, whether it's more trading based or long only based. But we have a couple different fund strategies, and right now we have a long-term fundamental research bucket in our fund where we're looking at really deep dive at fundamental analysis of companies and projects that we think are game changers in the future. And then we also have an event-driven or catalyst-driven bucket where we're looking at specific events in the space that have 1 to 2 month hard catalysts or dates or events that are happening where we can run scenario analysis on it. In general, we kind of think about the world as there's Bitcoin, which is just miles ahead of everything else in terms of money. And then you have a handful of real companies in this space. Some are cash flow producing companies like the exchanges, Binance, Bitfinex, Huobi, et cetera, who are finding innovative ways to use tokens. And then there's the decentralized projects that are important to the ecosystem but may or may not have figured out how to actually accrete value to its token and have some select investing around those tokens. But what I would say to everyone in the room is I don't know why anybody would be trading this space actively when you're going up against that. I mean, not only does he have more information than everyone in the room, but he has it faster than everybody in the room. So, that's why, for the most part, if you're not doing this 24/7 and you're not using machines, you shouldn't really be trading. You should be investing. And investing is not necessarily doing a trade every minute or every day or following every line. It's coming up with a theme, being very disciplined around the risk management of that theme and what the right position sizes are, and making your bets around that. Because if you're trying to trade the lines or trade the trends, they're going to crush you all day, every day, and that's not just in crypto, that's in any asset class. I mean, the two Sigmas, the Citadels, the D.E. Shaws of the world, they're crushing everybody every day who is trying to compete against that. So.
Well, that's a great point. When you look at most traders in general, like 95% of them end up losing their money, right? So if you're going up against, Russell here in his swarm of bots, it might be difficult. So in this market, what's the best strategy for people other than, buy low, sell high, right? So you say just invest for the long haul, but we're up here talking about bots and trading. So what's some advice you would give people out here as far as trading in general?
I think he had a really good point, and we say this a lot, like, if you're going to trade, and even she's been trading for 20 years, and correct me if I'm wrong, you need to go into it 24/7, fully dedicated. There's no like if, ands, or buts. I'm going to do this in my free time. And you need to be ready to lose for a long time before you start winning.
I disagree with like you can lose 50% of the time as long as your money management is okay, then you're winning long term. So I don't think you're constantly losing. So I think you just learn how to manage your money better, and that means that you'll win over time. But I also think with the bots, so a lot of bots work on Fibonacci. So when I'm trading, I can undercut your bots.
Yeah,
So I know where they're going to be.
It's a great point. There's, like we're talking about, the market becomes a self-fulfilling prophecy, and if you can see that self-fulfilling prophecy and understand not only where it's going to happen, but when you'll be wrong trying to predict it. Like a lot of people try to catch a falling knife, right? Where the price is going down and they say it's a good time to buy, but it's also going to be a good time to buy when it drops another 50%. So when are you going to say I'm wrong and understand that? Because a bot is going to say I'm wrong and get out of the trade, and no one's going to have any intuitive bias. But as a trader, you have to become more in tune with your intuition, but also emotionless in a way where you're able to remove your pride and admit that you were wrong.
But that comes with setting up the trade. When you're entering a trade, you know the conditions and you know how much you're willing to lose. It's the same as your bot.
Yeah.
So I go into any trade and the most I'll ever lose is 3%. And so I set that up from the get-go, and if the trade goes against me, I've lost 3%.
Yeah,
So,
and I would almost say at the end of the day, when you do that, when you have a systematic approach, that's what a bot is.
exactly,
Right?
yeah.
And you have essentially, the human being is the greatest bot on the planet, right? If you're able to remove that bias, right? And that's where D.E. Shaw and all these large firms come into play, and they take that human and they put it in a code. And that code runs 24/7 and manages hundreds of millions, billions of dollars, trillions of dollars in the actual stock market. And it's hard to compete against that unless you have 20 years of experience or you're willing to become very systematic in how you approach.
You have to become extremely emotionless. So, yeah.
Like a bot.
Yeah, but
Oh, yeah, emotion and just revenge trading in general.
is,
Just
yeah.
trying to get your money back. You make tons of mistakes.
It's never going to happen.
And then things end up worse. And they're just like, oh, what did I do?
So how does everybody feel about the sort of copycat bot strategies that are being offered by some companies today that give retail users access to purportedly, effectively the same kind of strategies that you might be implemented by copying? Presumably you'd at least be a little step behind. I don't have experience with those. They don't apply themselves or lend themselves as effectively to decentralized exchanges because of the latency and cost associated there. But that's a question that I would be interested in. Like, do you feel like someone could use a copycat strategy that's fully automated because you can track on-chain trades, and how would you feel as well? I want to hear both of those.
Anybody's strategy who's that good
panelists.
should be doing it themselves and not selling it to someone else.
Yeah.
It's the same reason why you don't take investment advice from Twitter or sign up for the $100 a month blogs that are telling you for a can't miss stock. It's, if it was can't miss, they wouldn't be telling it to you. They'd be doing it themselves. So I think you should always err on the side of caution in any of these things. Not to say that they can't work for short periods of time or even longer periods of time, but I would definitely err on the side of caution of using somebody else's trading strategy. Trading in general is a pretty generic word, right? I mean, a trade could be in and out in a millisecond based on signals. A trade could be I bought it at 3,000 and sold it at 12,000 9 months later. What you should do as a trader is just have a thesis and figure out what will make you change your mind on that thesis and be very quick to get out if that thesis changes. You can set stop losses at 3% if you want, but the danger of that is, this market is only liquid until you need it to be liquid, and then it's not. So you might have a 3% stop loss, and you might get out at 12% because the market is much more illiquid than you think it is. You can use a variety of different reasons to help on a risk management, risk mitigation standpoint with stop losses. But at the end of the day, it's about having a thesis, having a time frame, and challenging yourself every day and every week on whether or not that thesis still applies. And if it changes, get out. If it doesn't, stick with it and ignore the day-to-day, month-to-month gyrations that are happening around you.
Yeah, I'm in total agreement with that. And copycat trading is, it goes back to this self-fulfilling prophecy. And the issue with a lot of strategies is you can actually only put so much money behind them. Because once you put too much money into a strategy, it almost becomes untrue. If you begin to put too much into one direction or into a non-directional strategy, there isn't enough liquidity. So for a copycat trader, their trades might work great with $1,000. But now they have $100,000 behind that same strategy, and it doesn't work anymore. And if you're the $100,000 into that strategy, you're just going to lose money along with everybody else until you realize that it's not working anymore. And you're willing to basically say, okay, my thesis is unproven now. But at the end of the day, like, it really just comes down to finding that thesis, that idea of like, okay, what is Bitcoin, right? It's a store of value. Does this world need a store of value? Are we building a new paradigm? Does this shift that paradigm? Check, check, check. Okay, until those boxes are not checked anymore, that's when I'll sell, right? So that's a thesis and an investment strategy rather than trying to, understand Elliott waves every single day and sitting at that computer for 12 hours a day when someone at D.E. Shaw or Tantra Labs builds a strategy that's going to do just that.
And a question, so a little bit off topic, right? I mean, people are always trying to make money. It's been that way forever, right? And there's always been arbitrage between currencies. But Satoshi's original vision was for Bitcoin to be just peer-to-peer digital cash, right? Do you think we're ever going to be able to get beyond the speculation part of it and use it for cash? Or do you think people are always going to be, speculating versus using it for its utility?
I think it's on the way, definitely, with development of all the wallets. So when you think of, I always like to think of cryptocurrency as like the car model. So we've got Mercedes, which is Bitcoin, and then we've got the lesser ones, which are the altcoins. And there's around 3,000 of those at the moment, so I don't think all of those are going to survive. So as we sort of move forward, we're going to see less and less altcoins, and we're going to see more use cases for them. So adoption starts mainly with young people. So if we can start getting it into the hands of kids in schools, in high schools and that sort of thing, and that's going to move the currency forward because the kids will go home and say, hey, Mum, look at this. This is how it works. Many people don't use cash anymore, so it's all digital. You've got Apple Pay, you've got your FPOS card. So, 9 times out of 10, you don't have cash. So when you're using Bitcoin or you're using your altcoins to pay for something through your wallet or through an app, it's all done that way. So if you can educate people that that's the way it works, there's going to be adoption and it's going to move forward.
Gotcha.
This is the next phase of the internet. It's a very exciting time. Web 3.0 is going to revolutionize the way we use the internet, and I think history is going to repeat itself a lot with the Web 2.0 technologies of the client-to-server relationship. So there will be mass adoption. It will be in the form of the gaming industry. It will be in the form of mobile devices that are incorporating blockchain technology and things like that. The more and more people are using it, the more it's going to end up in the hands of the younger generations, and they're going to be using it, and the older generations are going to gain interest because of that, because they're watching their children or at certain ages using the technology. So,
Gotcha. How about you, Russell?
We're headed there, right? And it's a matter of time. It's all about adoption, and a lot of the analogy that I like to use a lot is, even though everybody goes on a website, not everybody knows what HTTP means or what HTTPS means. That's Bitcoin. Right now, we are the people that understand HTTP before the rest of the world. And one day they'll use it without even realizing that it's powering everything.
Gotcha. Craig?
So the question was when do we get beyond the speculative trading part of that? So I think the trading and liquidity part of Bitcoin is so fundamental to building this infrastructure and enabling this infrastructure that I think that's always going to be a significant part of this. I think there will be trading and speculation that goes on forever. I think the interesting part that comes out of this is, does this get to be when and how does this become stable enough, and when do the real use cases start to materialize that are enabled by this financial infrastructure that is in place that I think is more robust with a stronger set of trading tools and more sophisticated traders that are underneath. So I don't know when that happens, but I think while there's a lot of complaints about this is all speculation today, I think this is a really important part of building, enabling, proving this technology out in a robust way.
Cool. What you got?
I think it certainly can become a medium of exchange at some point. I think it just, like anything, more people have to own it and have to want to use it before it happens. The fact that we are constantly quoting it in US dollars tells you that people aren't thinking of it as its own currency and its own form of payment yet. So the speculation is fine. It may not have been the original vision, but I mean, 99% of technology companies the last 20 years didn't fulfill their original vision. They all pivoted at some point based on demand. So if right now the demand for Bitcoin and other digital assets is just for trading, then that's where it goes. And over time, if hundreds of millions and eventually billions of people actually own Bitcoin in their own wallet rather than on an exchange, then it becomes a natural medium of exchange. But it just doesn't, there's no reason that it's going to get there just because that was the vision. Lots of people have visions, but it's not based on what the supplier says, it's based on what the demand says. And right now the demand says speculative asset and trading.
Good stuff. We got about 8 minutes left, and I want to make sure I'm true to the audience here. Does anybody out here have any questions for us? I got plenty, but I want to make sure you all get your needs addressed too.
That's a great point, by the way.
Any questions out there? No? All right. I guess no questions for
I would add one thing onto the speculation part of this question is we act like there isn't a lot of speculation in traditional markets today, whether it's equities or currency markets. I mean, there's a tremendous amount of volume, and especially on the high frequency trading that goes on in Forex markets. That's not something that we or the news media reports on a lot, but I mean, those are hugely active markets with huge volumes. And we don't think that undermines the sort of, stability of what we want to use US dollars for when we go buy a cup of coffee.
Gotcha. And with the big gut punch that we all got in crypto here lately, with BAT getting pushed back again, you had Facebook getting, basically like a cease and desist letter from a couple senators. We had, Telegram getting sued. It's not looking that great for crypto right now. You've seen all these different, it looks like they're trying to control it or something like that.
But they're not, what they're controlling is not really crypto. So when you look at Facebook, it's not really the crypto model that we're looking at. So it was a stable coin and it was a centralized coin. And when you've got a Facebook model and you're using their coin, they're taking all the marketing, everything you buy, everything you use, everything you do with that coin goes into their, their algorithms for their marketing, and they know exactly what you're doing, where you're going. So that comes into the privacy, which Bitcoin doesn't sort of go into. So when you're using Bitcoin, you don't know exactly what you're using it for every time. So, and that's the difference I see with these cease and desist letters that are going out to these companies.
Gotcha. What do you guys think? Russell?
I think even like Libra is great for crypto because it gets people thinking. It gets people realizing, wait, all my cash is already digital, right? Why would I fight this new system? Whether it's done by some evil corporation or the government or whoever you want to put the hat on, you could go down a rabbit hole and even say that Bitcoin, and the reason we don't know Satoshi is because that was a government entity. That was someone who realized that the Federal Reserve had all the power and they wanted to take it away. Bitcoin is the first time in human history where we have the ability to actually change the paradigm of money in a non-violent way, in a way where we can come through the system and work. All like regulation and these things are good for crypto. It makes institutional money feel safe. It makes the rest of the world bring in a market cap. It makes the price go up, which is what a lot of people today want, because ultimately, if Bitcoin goes to $1, you're going to lose 90% of this market. You'll still have the hardcore believers and the guys like me that understand the protocol and know it's going to continue. But 90% of the people, like even this conference, is half what it was a year ago, right? Because the price isn't up.
Yeah.
People come when the price goes up.
Yeah, exactly. And then as far as, the volatility is why we're all up here, right? Is because we trade on it. But how do you get people to actually use it, if it's always volatile, right? You know what I mean? If it's $5 today for that burger and it's $50 next week,
Right.
how do we ever get beyond that?
Well, but the regulation you mentioned is how you get people to use it. I know this is an unpopular opinion, but finance and technology don't naturally mix, right? Technology is ask for forgiveness, not permission, and finance is the exact opposite. Everything takes 10 years before it gets approved, and then all of a sudden it becomes mainstream. So, you need Facebook to go through this regulatory, process. You need JP Morgan coin, you need Fidelity, you need these big incumbents. Even though I know the future of the world is decentralization and you don't need these guys, you're not going to get there overnight. These have all of the money in the world flows through these banks and through these large technology companies, and they have all the distribution out there, right? There's a reason that robo-advisors never actually took out Merrill Lynch and LPL and the other advisors. This new hot technology was supposed to make financial advisors irrelevant. Well, the financial advisor said, hey, thanks for the great technology. We're going to use it now too. You're not going to replace all of these incumbents. You need them, and there's, in my opinion, there's a reason that a lot of the finance people or the people from Wall Street are coming into this space because they know that. They know how to play the game. Arca has more, our company Arca has more lawyers and bankers than we do, developers and technologists, because in our opinion, that's what you need to get to that next level. So that's how you get the adoption, is you get the distribution, and you work with the companies and the industries that already have that distribution. And then once you have it, then it becomes peer-to-peer, and you actually
And to
work on
add,
Satoshi's vision.
to add on to that, because I completely agree, and part of that adoption and bringing on more capital, that's what will stabilize the price. As the market cap grows, see right now Bitcoin's at 150 billion, I think, it's right around there. The market cap cannot sustain. There are literally companies that could buy all of Bitcoin, the entire market cap, with 1/10 of their portfolio. There's money management firms that could spend 1% of their portfolio and own all of Bitcoin.
That's
if
what
you,
you're
if you
waiting
sell
for.
it to them.
That's what you're waiting for, right?
Yeah,
With your bots.
but if you sell it to them, right? And so for that not to happen, the market cap has to grow exponentially, right? We're talking about you're going to have to swallow gold's market cap. That's a $300,000 Bitcoin. We're going to have to be at $1 million Bitcoin before this is a stable asset. And that price, if we're going off halving cycles, we're looking at years.
Yeah. Cool. So where can everybody go to find each of you? So I start with Jeff. That way they can find you, maybe your Twitter, or however they want to get a hold of you.
Sure. Yeah. For anybody who's interested in the investing side of things, we put out very frequent commentary through our blog at ar.ca. You can find me on Twitter at jdorman81 or at arca, ARCA.
Greg?
And we're at total.com, TOTLE.com, and Total Crypto on Twitter and Medium, and we focus a lot on what's happening in the decentralized exchange space, decentralized trading, and some of the innovations that are going on in DeFi there.
Awesome. And my name is Russell LaCour. You can find me on Twitter. I don't tweet a lot, but my website is tantralabs.io. If you're looking to either invest in crypto as a quantitative analyst or write trading bots, we're trying to decentralize and build out a system that allows new individuals to think about Bitcoin as their denomination. So if you're interested in the future and you think the future is Bitcoin, check us out.
Okay, you can find me Twitter, Facebook, Instagram, LinkedIn as Lisa N. Edwards. And you can find my business at satoshisisters.com.
So you can reach us, you can reach out to Coinsquad, Google Coinsquad, coin-squad.com. Reach out to us on Twitter. We have a Discord channel, Coinsquad Discord channel. Also, the easiest place to get a hold of me is LinkedIn. I'm on there every single day. Thank you.
Cool. For myself, Crypto Beatles, easy to find. You can just find me on YouTube or TV, and Also, for the Monarch wallet, you guys can download that and start using it today. I appreciate every single one of you out here. Hopefully you got some value out of this. Hope to see you all at the Blockchain Beach yacht party tonight. So that should be fun, 7 to 11 I think it is. So, and big thanks to Joseph and Alon for putting this on, as well as all the experts up here on the panel. So God bless you, love you, and catch you on the next one.
Thank you.